We really want to boil this down for you, so let's bring in Joe Bert, a certified financial planner with the Certified Financial Group right here in Central Florida. And Joe, please explain to us in the simplest terms what's happened with GameStop and AMC stocks over the last week. We've read about it, we've heard about it, but it's hard to understand it.
Well, a lot of day traders and new investors have figured out how to temporarily, if you will, beat the system. And what they're doing is they're running up the price of the stock of a company that's been shorted by a lot of the hedge funds. And what shorted simply means is that these hedge funds bet that the price of the stock was going to go down, and when the price of the stock goes up, they have to do what we call cover their shorts, which means they have to go in and buy the stock at an inflated price. And this has been going on because of the chat rooms, particularly Reddit, that has a specific chat room for this kind of thing, and people are just pumping up the price of the stock, and they're hurting the hedge funds, and they're making a lot of money.
Is it true that somebody put in $50,000 and made $4 million or something crazy?
Oh, yeah, it can be done. I mean, it was done. In fact, just this year, the price of GameStop was up 2,300%. It's down 43% today, but it's highly speculative. And believe me, this is not investing. This is pure speculation.
So, Joe, do you think something like this will happen again with the power of social media showing us, again, how average folks can upend institutional investors? We know folks on Capitol Hill are upset about this and talking about trying to do some regulatory changes.
Well, Greg, you hit it right on the head. It's really caught the SEC's eye and the government's eye, and I'm sure there will be some restrictions, some way, shape, or form, because it's easy to do. All you have to do is get online and pump up the price of the stock, and everybody jumps on it. And particularly if they think that other people have to get back in to buy the stock at the inflated price, that only pushes the price up higher. And that's what happened to the hedge funds. They shorted the stock, and because the price went up instead of going down, they had to go in and buy the stock at an inflated price, which only exacerbates the problem.
So, in advance of this regulatory action, should I be personally worried about, say, my 401k as just an average person who's kind of on the sidelines, not really having their hand involved in all of this up and down stock market stuff?
That's a great question, Greg, but the answer is absolutely not. It does not affect directly the stocks that you own, stocks of companies that are making money, that are projected to make money, that are good companies. This is speculation on a handful of stocks that the social media has gotten a hold of, and they're jerking around the price. So don't worry about your own individual investments. Remember, investing is long-term. This is pure speculation. This is going on the sidelines, even though it's in the stock market.
And you can watch my full interview with Joe Bert online at WFTV.com.